there is still a lot of talk about Nigeria's 6.1% contraction in the second quarter of this year, 2020. With regard also, and here it is, here's a summary again, 6.1% contraction. Contraction, of course, the oil, GDP, non-oil. Question now shifts, of course, to the best and worst performing sectors and what it means moving forward for the recovery of the country, and also where exactly investors can actually look forward to as far as destinations for investment. Joining me to discuss this is the head of investment management at Cordros Asset Management, Gbolahan Aina. Gbolahan, good morning to you, and thank you so much for joining us on the Global Business Report. So, of course, I'm sure you got folks at Cordros have already looked at the economic data. I wanted us to first pull up the top 5 performing sectors and see if we can take a look at why they perform so well and what it means going forward for recovery for the country. And then also we'll look at the worst performing first. So Gbolahan, financials, I guess, what's your take? It's still the most active sector on the Nigerian Stock Exchange. People are still carrying out banking transactions. What's your take on financials being the top performer?
Okay, thank you, Rotus. Thanks for having me. Really, the financial sector, they are intermediary, and there is so much activities going on within the period. So that was contributory to what we saw in the financial sector. Even some of the palliatives by the government as well, all had to flow through the financial sector. And there was so much activity in the capital market, in the debt market as well during that period. So that really was contributing to the performance we saw in the financial sector. For communication, there was lockdown, people were at home. Data contribution or data usage increased, voice also increased. To put it in proper context, voice increased by about 11% to now about over 100 million in terms of voice usage. Also, data also increased as well. So, because of the lockdown, people had to use some of all these things. So that was why the ICT sector increased. Some of the other performance that we saw agriculture increase, and that, of course, there was increase in crop production and also increase in livestock feed. Coal increased as well, and in recent times, there's been deliberate effort by the federal government towards this industry. As you're aware, Nigeria has about 34 mineral resources in 450 locations. The government has deliberately allocated about 85 million into mineral resources. Motor vehicles and assembly also increased by 6.95%, and water supply sewage by 5.71%. And really, that was because of the lockdown. People needed these resources to be able to function effectively at home. But on the flip side, we saw a downward performance. 5 sectors, which we say were the worst performing sector: oil refinery, and majorly because oil production had reduced. Nigeria has been complying to the OPEC cut. As at May, compliance level was about 85%, and in June, compliance level was 80%. That's excluding condensates. And you can see transport barely eats because of lockdown. There was interstate lockdown across the nation. So road transport came down, air transport came down, road transport came down as well. And of course, accommodation. During that period, people were not going to the hotels, they're not going to the restaurants, they're not going to eateries. So that was contributing to the 40.91% that we saw in accommodation and food services. So it wasn't really surprising, the figures that we saw. I guess it was expected, maybe not this magnitude. But going forward, I think the fear is that Nigeria is probably going to enter stagflation. And stagflation is where you have high unemployment, you have increasing inflation rates, and of course, declining GDP. And really, that's usually like a difficult thing for policy watchers, because they don't know which one to go after. So we saw the inflation figures at 12.8%. That's huge. Unemployment figure is over 20% as well. So that's what the CBN and the MPC, they have to contend with going forward.
Excellent stuff, Gbolahan. Thank you so much. I do want to follow up on what you just said about stagflation. Some feel that Nigeria has already been, and I've asked this question numerous times to all our guests that come on the show. Some already feel that Nigeria has been already in a period of stagflation, because the unemployment data, Q4 2018 all the way through Q1 2020, we missed 6 quarters and we only got Q2 2020. So if you think of unemployment having been climbing all this time, you think of inflation having been climbing, growth, GDP growth stagnating, would you buy the argument that we've already been there, we've already been in a period of stagflation, or do you still think we can enter it?
So theoretically, no, because theoretically, for you to enter a recession, it has to be 2 consecutive quarters of negative GDP or decline in GDP. So by next quarter, definitely we still expect to see a lower GDP or a negative GDP for Nigeria. So yes, there's been a bit of ease in the economy, but most economies are not as active as before. Airlines are not yet open for travel abroad. The Minister of Aviation said by 29th of August that will happen. So we are not seeing business travel. We are not seeing tourists coming into the economy. Most of the hotels as well, in terms of occupancy ratio, they are not fully occupied as well because we are not seeing those business tourists that we used to see in the past. So definitely Q3 figure is going to be negative as well. So by Q3, theoretically, we can say we are now in stagflation.
Okay, fine. So I guess you're using the actual hardcore recession for your take on stagflation, which is fine. What about the recovery? Are you looking at early 2021 or later in the year, or maybe even 2022?
So this year, I don't think there will be a recovery this year, and the government needs to do some certain things. And if you look at the GDP figures, one of the major performance for the manufacturing is because FX. So there's still the FX challenge. So a lot of manufacturers are not able to source FX that they used to before. From March, for instance, the CBN stopped selling FX to the BDCs. So there's still that dollar scarcity. For a lot of FPIs, they've sold their position. They are not able to exit the economy. I understand about 2 billion in terms of FPI position that want to leave the economy. So from an exchange rate perspective, from an external reserve perspective, there's still a bit of trouble. So if they can fix the FX challenge, if they can liberalize the FX, we might begin to see a bit of traction. We were quite hopeful from IMF to get some of the loan, but that's been shifted to maybe sometime in October. If that loan had come, we would have shored up our external reserve. So if we can get those multilateral loan, by the time we can fix the FX, then we can begin to see a bit of traction. But I don't think we can see any recovery in 2020. Earliest we can see is Q1 2021 towards Q2 2021.
All right, thank you for that. Actually, it's the IMF already gave us money. I think it's the World Bank you're referring to. It's the World Bank that's holding up until October. But on the FX matter, I do want to follow up on something. The central bank has said that sales to BDCs will resume once international flights resume. I think that's the 29th. That's this Saturday. Yeah. So I want you to mark that against the FPI. So, how much of an impact would selling to BDCs have on the liquidity issues? Or does it have to be holistic, including FPIs as well?
It has to be holistic. So for the FPIs is the I&E window. BDCs is majorly for PTAs and BTAs, really for personal travel and business travel. So the FPIs cannot really access that BDC market. For the FPIs, it's the I&E window, and they are not getting the supply that they need. So it has to be holistic, like you said, for us to see a remarkable change in the FX regime.
Thank you for that, Gbolahan. The time just flies. I quickly want to get your thoughts on the new gold ETF and whether that is an outlet for investment because of low yields that we're seeing for T-bills, bonds, and so on. In a minute, if you can.
Yes, so yes, it is. The new gold has gained over 7 billion this year, and that's investors trying to run away from the low yield, and of course gold has always been seen as a safe haven. So yes, investors can purchase the new gold, but they need to be mindful of entering at the right price. And another thing is that investors can also look for dollar denominated investments, dollar mutual funds, and also dollar placements or Eurobond. Those offer you currency edge and also offer you attractive return on your investment as well.
All right, we've been talking to Gbolahan Aina, the head of investment management at Cordros Asset Management. Gbolahan, thank you so much for joining us on the Global Business Report and giving us your thoughts on the top 5 and bottom 5 performing sectors in the second quarter of 2020 for Nigeria, as well as whether gold, the new gold ETF, which has been doing well on the Nigerian stock exchanges, where investors should be looking at, of course, considering the risks that involve and having a proper entry price. Thank you, Gbolahan, again. You're watching the Global Business Report here on Rise News.